Greetings. Today is Monday, June 29th, and given the holiday week, I thought I would go ahead and shoot the monthly update video for clients and friends a little early. So let's dive in. The first thing that we want to chat about is the S&P 500, as that is the typical benchmark that folks are using, right or wrong. And we can see that the month of June was pretty tough on the broad indices. This is June 1st right here, I believe. So you can see the overall month of June was negative, and that does tend to match the seasonal pattern of the S&P 500. But we see the 50-day moving average is holding steady at the moment, and that is serving truth so far today. The bigger news is really the Magnificent Seven. As I talked about in our mid-month update, the Magnificent Seven has really struggled, and I would contend that's arguably good news for everything else. Remember, on the way up, the S&P 500, we kept pounding the table that, guys, you got to remember that the S&P 500 is cap weighted. These top 7 to 10 stocks have a magnificent influence on the math of the S&P 500. So even though a lot of stocks out there were struggling, the Magnificent Seven was making it look like the S&P 500 was doing great. Well, now the inverse is true. The S&P 500 is not doing all that great because the Magnificent Seven is weighing so heavy on that index. Again, it's just a math problem. If you look underneath the surface, we see some good signs. These are some ETFs or indices that we look at on a regular basis. Year to date, we see what's on top. IWM is the Russell 2000. That is small cap. That's smaller companies. I would contend that is good news. We now have smaller companies leading the charge. Commodities have come in. I think I'm going to show you a chart on oil. I think if you've been following the news at all, you understand why that's happened. DJP is a commodities index, but it is heavily influenced by the price of oil. Since the peak, the price of oil, I think it's down like 43%. So this isn't that surprising. So you got small caps in first place. VO is a mid cap, so medium size, and then RSP, which is the equal weight version of the S&P 500, and then you have SPY. So I would contend that's what I want to see in a healthy bull market is the risk is the risk appetite is pushing the smaller and the smaller companies higher. I would contend that's good news. A couple other things to note. Gold is actually negative. I think we're going to talk about that briefly as well. Magnificent Seven, negative year to date. And again, AGG is also negative year to date. So again, if you haven't heard us before, we'll say it again, stop using bonds as your portfolio stabilizer because it doesn't always work. Next point is expanding breadth. This is IWM, again, small caps. And what I want you to see is this is the percent of this small cap universe that is trading above the 50-day moving average. The 50-day is 2 months, and that is generally considered the short-term indicator, and then the 200-day moving average. So what percent of the Russell 2000 is traded above the 200-day moving average? That's your long-term indicator. And you can see that breadth was weakening a little bit recently. It has expanded. That is bullish. That is a good news. The longer term trend, it was kind of trending sideways, but again, that has also broken out. Again, that is good news. We'll take a look at the advanced decline line on IWV. IWV is the Russell 3000. It's going to capture about 90% of the U.S. stock market. And again, we see all-time highs on the advanced decline line. Price is not confirming that, but that's okay. This is what's called a positive divergence. This is what we want to see. And because IWV is also cap weighted, what this is telling us, again, is a Magnificent Seven is weighing heavy on this ETF, on the performance, but this is what I want to see because that's giving us opportunity underneath the surface to find something that is outperforming. So I like that as well. Russell 2000 advanced decline line says the same thing. Again, all-time highs on that advanced decline line. So when I look at the index, the S&P 500, the month of June was pretty tough for that broad index. But when you look under the surface, we're seeing expanding breadth, and that is a good sign for the market's health overall. Last thing we want to chat about is some of the economics. And, the comment on the slide is concerning inflation. Well, inflation, this is CPI, Consumer Price Index. CPI has ticked up the last 2 or 3 months, really 3 months. Is that concerning? Well, of course it is concerning. However, I'm going to contend that we see disinflation underneath the surface. So the challenge when you're looking at economics, whenever you're looking at economic data points, you have to recognize that you're looking in the rearview mirror. Hopefully, when you go drive home from work today, you'll look in the rearview mirror every once in a while, but hopefully you do the majority of your looking in front of you. Right? So we want to see this data, but we have to recognize it's historical. This doesn't tell us what's going to happen. It tells us what's already happened. So let's look further than just the CPI. So now we have gold, GLD. That is not indicating that the overall market is concerned about inflation because the price of gold has really come down. And then we see the price of oil. We've talked about this ad nauseum, that we had this catalyst of the war with Iran pushing the price of oil up. Well, the price of oil is obviously going to impact your gas prices, but it really impacts just about everything else in the economy because you have to drive to and from work. It's going to impact groceries because the truck drivers that are delivering the groceries have to pay higher gas prices, so the price of groceries goes up. Well, what's been happening is we've now seen about a 43% correction back down in the price of oil. That is disinflationary, and we think that's going to begin to permeate back through the economy. So no, I'm not overly worried about inflation. So we'll keep it there for today. We hope everybody has a wonderful Independence Day celebrating America's 250th. Remember that in order to invest well over the long term, sometimes that means we have to first survive the short term.